Hello, everybody, and welcome to episode number 89 of Confessions of a Market Maker. I'm your co-host, Ray, aka All Day Ray, aka the patriotic short seller. And I'm joined here by my esteemed co-host, former market maker, 20 years and current day retail trader, the prodigal son of Regina, the Brown Tom Selleck lookalike. He sold more paper than Xerox. VWAP Trader 1. JJ, how's it going?
Ray, how you doing, brother?
Oh, I'm doing great, man. And our guest today is co-founder and CEO of Hxro and the Hxro Network. It's a decentralized derivatives protocol built on top of the Solana blockchain. Prior to Hxro, he's had close to a 30-year career in traditional finance as a trader and in trading operations. I'm talking about Dan Gunsberg. Dan, how's it going, man?
Dan Gunsberg, aka Gunny, aka I don't know. I need to come up with a name that's as good as yours.
Oh man,
I like Gunny. Gunny's good.
Yeah, I've had Gunny since I was like, I think I started playing hockey when I was like 4 years old, and right out of the gate, my last name being Gunsberg, the coaches started calling me Gunny, and it just stuck for my entire life.
That's awesome, man. Yeah, hockey's a lot of fun. The coaches,
For sure.
I actually played a little bit of hockey too growing up, man. Teaches a lot of good things, and the nicknames, the camaraderie, love all that.
Best.
Dan, just to open up the podcast, and I'm sure the listeners are tired of me talking about poker, having poker guests, but I would be remiss if I didn't ask, because Caitlin, the one who helped coordinate this podcast together, and shout out to Caitlin, she works at Hxro with you. To ask you about poker. She made sure,
Yeah, that was interesting. You know what? I've been a social player for a long time, and it's like anything that you do, and then you kind of like get a little better at it. Like I play a lot of golf, for example, and like when you start in golf, it's like this like kind of lifelong journey, and then when you start to get good, like getting better gets progressively harder and harder, right? This is like anything you do in life, and I kind of got there with poker. I was, like online was starting to like make a little money, and playing some tournaments and stuff, and doing it like in my off time, and just got better at it and kind of learned the art of the game a lot more. And then last year I went to there's a company called StormX that my friend Simon founded, and they had a poker tournament in Vegas last year. And I got to play with some pros and a few others. And the night before, they played a cash game, and I can just tell you that the level that I was at and that I thought was at relative to where those people were was like out of the stratosphere. It's so much so that I got my ass kicked so bad that I had to go to a blackjack table and grind my losses back, which is about as degenerate. I hated myself for it, but I did it. And fortunately, I got some of the RA's money to replace my poker losses. But no, I do love it. I love the game, and I love the probabilities aspect of it, and just kind of the art of it. And it's really kind of helped transcend my trading in many ways. And and if you think about trading, even in business too, like it kind of permeates into other parts of your life. You start thinking about probabilities and kind of how to read situations better, and it's been great.
Absolutely. And these are things, on this podcast I've talked about, because I 100% agree. I went from poker first to trading, and poker helped my trading. And now, I still keep up and play poker, but trading's helped my poker playing as well, and just other areas of life, like you mentioned. And I plan on asking you about, like, even being a CEO, running companies. Would you say like trading something an aspect as well?
Yeah, no, it definitely is helped in so many ways. And like one of the things that I think you either learn in poker or you learn in trading, which like both, if you do properly, can be a positive EV, should be positive expected value for you. And so, and you think through those situations, and like, I think the biggest thing that you learn is to miss small, and to find asymmetric upside. So like your bets that you're making, you want those bets to be controlled and have controlled downside, and get away from things that could have kind of more tail level losses or catastrophic losses. Get rid of those, like if they're not working, and you can always put them back on. And then get yourself into situations where your upside is asymmetric from a risk perspective relative to the amount that you have to outlay to stay in the game, so to speak. And so I think that general thesis really works well in anything in life, but like in business and in poker and trading. And I think that's probably like the biggest takeaway that I've had that's really kind of matched business and trading and poker for that matter. So
yeah, absolutely. Well said. Well said. And just a reminder to the listeners, if you guys would like to join a supportive and professional community of traders, you can join us at microefutures.com. So Dan, as I mentioned in the intro, I started in traditional finance. I believe you started on the floor of the Chicago Board of Trade. Maybe just give us a little background on how you got started there.
Yeah, without going into too much detail, my family moved to Chicago when I was 18 years old. I was going to college. I came back for my summer. When they first moved, I came over like some holiday, and I went to the Board of Trade and was up in the visitor center, and I looked down on it, and my whole world changed. And I didn't know what it was at the time, but really it was like the degenerate dopamine rush of watching that floor and seeing everything that was happening there. And knowing that this was a kind of at the center of the financial market world, it just was something larger than me that I needed to be a part of. And so when I came home for the summer, I went down to the Board of Trade. Long story short, I knew I had a contact down there, and the guy kind of stood me up. And so another business lesson, like, sometimes you just got to man up and do things yourself to get started. And I went down there. I got a job, like basically the lowest form of employment to get myself on the floor. Like garbage collector, I would have taken that, but there was kind of one above it, which actually got me into the trading pit. It was like a job that you basically like punched a number into a computer when a trade happened. But I learned the hand signals. It got me down like in the mix, and I ended up meeting some people down there, and I played golf with some guys, and they ended up giving me a job as part of their group, and kind of worked my way up through the ranks. And I spent my summers down there, very grateful for the time down there. It was such a wild time. It's so crazy. And then when I finished school, I started trading. Right at that time, electronic trading was starting to spin up. There was something called Project A at the Chicago Board of Trade that had, it was like the first internal electronic trading system. So much so that like there was probably only like 20 or 30 traders on it, because it only operated overnight. And and I would say of the 20 to 30 traders, like 15 of them all cleared the same clearing firm and were backed by the same guy. And that guy was trading overnight. So when that guy would get run over on a trade, he would actually like call the command center and say, who the fuck was that on the other side? And if it was a high probability that somebody that he was backing, he would force them to cancel the trade. It was like,
really?
It was it was so broken. It was so wrong. And, but I learned how to trade on the screen, and I was trading, mostly like 10-year treasury notes against 30-year treasury notes, and then going in the pit in the morning and trading my way out of it. The pit was something that I never fully connected to. I'm not a small guy. I'm about 6 feet tall, and at the time maybe I was 180 pounds, a little heavier now, but so is age. And but you got down there, and it was like you were really kind of nuts to butt with a bunch of guys that were 6'3", 6'4". They hired a lot of tight ends and linemen down there, and what I didn't understand at the time was you really needed to befriend brokers, and kind of you just like each stand in the bond pit was so big, and like it was just like groups of what they called locals, people trading for their
Yeah.
own accounts, that would kind of gather around brokers, and those brokers had order flow when those orders came in. Those were the things that were really crossing the bid ask spread, and good traders really would just stand there and kind of you take that liquidity in
Yeah.
and soak it up, and then eventually, like you'd oftentimes get run over. You try to scalp it or scratch it, and you get run over, and you just hoped that when you got run over, the broker would come back to you the other way. And so I did that for a while. I quickly got on the screen, which suited me much better. Even though I did blow up when I first started, and then I got into I blew up, and then I took like a 4 months off, and then I went back and started trading equities. And then when I traded equities, this was like in '99, end of '99 now, and the whole Nasdaq boom bust was really starting to pick up, and that's really I caught a good tailwind and had a very successful run there. And so that ever since then, I never went back down to the floor. I had a seat on the market for a while after that, and I just go on the floor really to just try to capture some edges here and there. And it was almost more of a social thing for me at that point.
Yeah.
But I was spending most of my time, and all my risk really was on the screen. And did that. Eventually got into short-term interest rate trading, and was doing that on off the floor. And then in 2011, I ended up going to a prop firm that a couple of friends of mine had founded, and went in and started building out trading desks there, and eventually became principal chief operating officer. I found crypto while I was there, and kind of the rest is history. So, yeah.
Dan, I want to ask you, when you mentioned when electronic trading really first started to become a thing, and like that's what you first went to, was there an edge, like being kind of like one of the first people, first people that really gravitated towards electronic trading, as opposed to, I'm sure maybe some of the old traders were a little resistant to it at the time?
At first, like talking about when it was just Project A, there wasn't much edge, because at least in the things that I was trading, because I was trading U.S. Treasuries, and they had an overnight pit session that was kind of an aberration at this point when you kind of think about it. But I'm sure there were some people that were smart enough to trade side by side at the time. But really, when things took off with electronic trading, at least in derivatives, was there was a relatively long period of time where there was so much flow going into the pit, and then you had the screen trade, and it was what they call the side by side, and there was such a long time where you could capture edge on either side, and like it was free money, and then obviously that arbitrage over time closed. But I think that's really where you captured edge from when you really understand what professional trading is, like there's these components of it. There's a liquidity providing component where you're trying to capture bid-ask spread. There's arbitrage. There's all these elements that when you're building out a trading desk or trading business, you kind of want to have touch points in all of these, because they're positive EV trades. And over time, it's just how many transactions you can get that will start adding up. There's that, and rebate programs, all these other things that professionals, really sink their teeth into. And then once that went away, like the other things that you really had to rely on was more like what I would consider more like just informational asymmetries, like or just being able to see things a much wider expanse of the market, and understanding correlations a little bit, and starting to see like, okay, well, this is leading for the day, so when this moves, I can go lift this other market over here and capture edge. And like started to have to do the like more information arbitrage, I would call it. And then over time, like high frequency trading really picked up. And then all of those, if you were not getting deep into like ultra low latency stuff, all those arbs went away, and the market, got a lot more difficult for a lot of people. So, luckily I kind of transitioned. When I got on that electronic trading wave early, it helped me stay just ahead of the curve to to kind of see what was coming next. And a lot of what got me into crypto was the fact that when I started trading crypto in 2015, and it was an absolute redux of what was happening in the traditional markets, and had this massive fragmentation where you had arbitrage going between all these different exchanges, and didn't have the capital efficiency aspects of it, which are things that are really more or less being solved now. But there definitely was a lot of opportunity because of just early fragmented markets, and just a lack of sophistication at that point. And so, and obviously that's starting to evolve, very similar to how we've seen electronic trading evolve today, and kind of where it's at today. But yeah, that's kind of.
Yeah, that's interesting. So you being a seasoned trader, you once you got introduced to the crypto markets, you immediately were able to find the edges there, and I'm sure you capitalized pretty well on it.
I mean, they were like, like, to use a sports analogy, when you're batting baseball, like some days you look at the ball coming at you and it looks like a beach ball, and some days it looks like a pea, and you can never explain why, but you're either in the zone or you're not. This was a beach ball for a long time, and there's still beach ball level opportunities out there because the innovation is so fast, and so much about crypto is like this experimentation, like around finance, and this transition towards this more democratized DeFi world. And there's just all these different dimensions of opportunity that exist. And really, it's like this become a meme, but it is very early still there. And so we start to see these opportunities pop up, and it could be things like the things I was talking about, just having straight arbitrage between various exchanges or jurisdictional arbitrage. But now it's moved into like there's NFT trading, like trading NFTs in the same way that you trade, e-minis is starting to become a very early days of it. And so it's really opening up this opportunity of like markets on everything. And with that comes a lot of broken, fragmented markets. And again, like that, it's that cycle just starts over, lack of sophistication. You have to be willing to remove yourself from what you know as a norm, and be willing to be a little uncomfortable and be like, I can't believe I'm trading this, but but there's opportunity here. So
exactly.
I'm trading. And new types of arbitrage are existing, like around minor extractable value, something called MEV in things like Ethereum. It's starting to pop up in things in the Solana blockchain, which is something that I'm pretty heavily involved in. And I think we have many more years of this. And then obviously just have the overall volatility of the crypto market, like that, which creates opportunity. That noise creates a lot of opportunity, and there's a lot of gravy there to be, even for just the average retail trader. If you can find your pocket in certain things, and there's a real chance to have real good positive EV trading for, and over time it's going to go away. It's just the nature of how markets work, but it's there very much so right now.
Yeah, it's really fascinating. You brought up the point. It's like I can't believe I'm trading some. Like I'm over here, Dan, and I'm trying to trade NFT racehorses. And it's a fun. I'm not to get into it, but it's like a racing game. But like there's a trading aspect to the game too as well, right? Like the buy and the sell of the horses, and just having that trading mind. It's just trying to find an edge there, and it's just a fascinating world we're stepping into here.
Totally.
Yeah.
I mean, speaking of racehorses, like that's one place we're thinking a lot about, is like just from a we're building this on-chain derivatives infrastructure. So it's kind of like the exchange matching, and then the clearing, settlement, margin, risk layer below it, all kind of bundled into one set of smart contracts. And then anybody can plug in. The way we've built what we call dexterity protocol is that it's generalized. So it's just an accounting and payoff function with a customized risk engine attached to it. And you can give it instructions to basically create any type of market on any asset, as long as you have an on-chain way to settle the transaction, like which you really need an oracle for. So like that makes us think about, and and the timing is interesting for this, things like sports betting,
Yeah,
or things
absolutely.
like in-game horse racing. Like horse racing, live in-game horse racing over in Europe is a huge thing, where each horse has a is going to settle 0 or 100, and those markets on each horse moves as the race is progressing. And so you can actually trade a live market on all those. And there's some of the largest market makers on the planet that are like knee deep in this business, being liquidity providers to it.
Yeah.
And
Oh, very
it
interesting.
sounds so fucking degenerate, but it's like people love it. But really, at the end of the day, it's trading, right? It's just trading on an
Exactly.
asset.
Yeah.
So
Yeah.
we look at it and go, well, let's look at what's going on in the United States now with state by state, with online gambling becoming more legalized. And will we go to that level? And then if we go to that level, I don't look at it as much as like just pure retail speculation, which is going to happen. It's going to happen whether it's legal or illegal, right? I look at it as there's liquidity providers there. There is now an economic reason to hedge a sports book. And when you have an economic reason to hedge, there's an argument to be made to say, like, can you launch regulated futures in the United States on like on sporting events? Because the size is large enough now that there is economic reasons for sports books to hedge. You have institutional kind of quote unquote players, those institutions being the large Caesars and all the big sports books, and the market makers that are on the other side of it. So it's a really interesting time. It is kind of like this idea of derivatives on everything is really something that we think is going to really explode here in the next few years.
Yeah, and I couldn't agree anymore. I mean, just the I'm a sports bettor as well. I like playing betting on like fantasy football, and like that whole industry is just exploding, and I'm sure the legality in America, people just love betting on stuff. You know what I mean? Like you said, like it's a little bit degenerate, but people love it.
It's human nature. There's a vice to it, and obviously, and like, look, the stock market is, if you're trying to trade the stock market without some proper training, you go through, like, you have negative expected value if you're trying to trade in and out of things all day. And even if and it's crazy, like you see like all the people that are like kind of short selling options all the time, and like it works great until it doesn't, right? Because you think, okay, well, 90x% of all options expire worthless, so I'm going to just keep selling like deep out of the monies and kind of pick up nickels, but it's nickels in front of a steamroller. And the question is like, can you make enough that it all is going to revert at something? You're going to be on the wrong side of that. There's not going to be a way to get out, and then you're going to kind of give back X amount of what you made. But it's just human nature, right? It's just like, it's all in us. Like, whether your reasons for trading, is it like, you have to ask yourself, like, is it the dopamine rush? Am I missing something in my life? That, like, why am I over trading because I have bills to pay? Or am I over trading because I really am not thinking about this, but when I step back, I really am like chasing the rush, the rush of being in a trade. And that's when it kind of crosses the line into gambling. There's nothing that anybody can do to stop that. There's no regulation in the world that's like gonna stop. And if you think about like playing blackjack, let's take like blackjack, for example, even, which when you walk into a casino, even with the best rules, like you're still, and you played a perfect strategy, you're still like a negative 0.4% disadvantage. Right. So it's like, it's pretty much a coin flip if you play properly. The house is just making it up over the law of large numbers.
Volume. Yeah.
That's the pure volume, right? And why are they that much different? Why are they that much different? They really aren't, right? Now, the big difference is obviously there's an economic reason to have stocks and futures and things that, like, which makes sense. But it really, I think we're in this time where it's like, especially with the prevalence of electronic trading, and also with where crypto is going, and like the infrastructure that's being built, we're really at this intersection of gaming and trading. And I don't mean gaming in like a World of Warcraft way, and maybe a little bit of that, but really in this like gaming world, and how does this all start to merge?
Yeah, like
and,
casino gaming, like in that sense. That's what
Yeah.
you're meaning. Yeah.
I mean, I
That's
live in
right.
London now, and there's a sports betting gaming place on every block. It's like
Oh,
you just
sure.
it's crazy. There's a Ladbrokes, there's a, it's like, and they've been there forever, right? So this is like the next natural progression, right? What I'm
Yeah.
interested in is the clearing. That's fascinating because my specialty was cross-border clearing, right? In U.S. equities.
Mm-hmm.
So, and knowing how to work the clearing system. So is that stuff all done now through blockchain and done like,
Instant.
instantaneously? Cool. Very cool.
That's one of the big effects. One of the big benefits that we see, or kind of where the world's moving, is the two things like inline risk, which is the risk updates with every new transaction across the whole
Okay.
network,
Wow.
and so and also your position. So we use portfolio. Our model has portfolio margin, so you get the benefits
Okay.
of your entire book, of all your positions get looked at as one big position, and then you get
Okay.
you have your haircut or your margin requirement based on that, and that updates in line. It updates in real time,
Oh,
and
cool.
and when you are near liquidation, it will warn you, and when you're getting liquidated, basically you no longer own the position. It would be as if your clearing firm took the position back and said
Fishing
it's
them.
with us. Yeah, it's
Got
with
it.
us now, and you're out. So that all happens in a decentralized way through building with smart contracts, and
Cool.
been very, and it's taken us almost the better part of a year, and with some of the some really great minds both in engineering from crypto side and from traditional finance. Like a lot of our backers, a lot of the teams that got involved with us over the last year, a lot of Susquehanna, Jump Trading, Alameda Research, Chicago Trading Company. Like these are prominent trading firms that have
Mhm.
that have all kind of come together and think about how we can build this DeFi lane kind of for the greater good of everybody. And part of that is solving these things like around capital efficiency and around real-time margining. And I look at it from a long-term perspective as a real way to a real step forward towards like kind of the horizontal disintermediation of systemic risk. Like let's start thinking about the benefits of this in a way that like, having real-time risk is better than risk being thrown under a rug, and kind of you have, like you were talking about, kind of being able to game the clearing system. And
Oh, exactly. Yeah. I mean, when I started
yeah,
trading in Vancouver, we had 13-day settlement, right?
I mean,
Can you imagine the kind of tricks we got up to with that,
I
right?
could not even imagine 13 days. Like even like 3 days is crazy. Like T plus 3
Yeah.
is like insane to me.
Yeah.
But
Yeah.
that but let's be real. Like these big nasty systemic events, which even with we've had in crypto with like
Yep.
Three Arrows and with Doquan and Luna and all this bullshit, like it all starts with human error at some point.
Hmm.
Somebody has a lapse in judgment. Oftentimes it's around an honest mistake, and then it metastasizes.
Gosh.
And
Yeah.
and when you don't have real-time clearing or real-time transparency around
Oh,
risk,
yeah.
you have
That's
and then even more so if you have that and you have it in a centralized place.
yeah.
Now the decision, there's only a couple decision makers that can decide, like,
Exactly.
do we want to sweep it under the rug? Do we want to
Yeah.
like, and that can't, we want that to go away. We want
Yeah.
decision through the through community, through network governance to be run in that type of manner, and have rules that you can live by. And like it's painful for the old, kind of the old network, but it's a new way of thinking. And I think a lot of
Mhm.
people would rather find ways to mitigate systemic events
Oh, yeah.
than
I mean,
to be able to get make just a couple extra bucks because you can do things a
exactly.
little. Yeah.
I mean, we did have Nick Leeson on the podcast, so you know.
Oh, Jesus Christ.
So
I
yeah,
had some good stories, but I don't know that they're gonna even out to.
no, it's okay. No, it's okay. We're here for the stories.
God, I have to go back and see that one. Oh my gosh, that's amazing.
Yeah, that was an interesting one. That
When
was
a
a fun
trade
one.
error spirals out of control.
Yeah, that was
Great example. And he's the best. He's the top, one of the top, clear cases of like a lapse in moral judgment. Like a lapse in, and he understood the clearing system and was able
Yep.
to game the shit out of it, right?
Exactly.
Yeah,
Exactly.
incredible.
Yeah.
Dan, I just want to take it back to what you were saying before. I always like asking guests about their learning curve in trading, and you mentioned you blew up account. What were some of the things you struggled with when you first started trading?
I think just some of the typical things that you have to kind of learn the hard way. And also you see a lot when you're when you're there, and when you're an outside, when you're a part of it, but you're not necessarily at risk. It's a very different feeling than when you're really doing it and there's real money on the line, right? It's night and day, and it's so easy to be an armchair quarterback and like, oh, I would have done it that way, and you just can't know till you're in that position, because you don't know what kind of emotions are going to come out of you. And I would just, I think, to be very clear, I just was immature, and I thought that like you could follow very strict rules, and it just doesn't like, and you could be hyper disciplined. And when I first got in it, somebody said to me, this is a guy that was making, this is 1998, that was making 8 figures a year trading. He's like, if you can go in that pit and make 10 to 20 ticks a day, he's like, okay, like 10 ticks a day is $312 a day. And he's like, you're going to make, 75, 80 grand a year doing that if you average that out. And he's like, give yourself a year of doing that to just kind of learn the ropes. And like, I didn't know what learn the ropes meant. And it could be things. So when I started trading electronically, the bottom line is I just got in over my head. And the way that electronic system worked was pro rata. And you get this feeling, it's like riding a motorcycle without a helmet on. It feels real safe and you feel fine until you get sideswiped. And a bank came in and cleaned the bid side of the market out and dropped the bond market like 1.5 points. It was like on a fat finger. And
wow,
I had no experience dealing with that. And now I had a position on because it was pro rata. So I was overbidding, trying to get more of the order flow that came in. And suddenly it was like, for me, it was massive, hundreds of thousands of dollars negative. And then I had to I put bad spreads on because I panicked, as opposed to just like taking my finger off the button and saying, let's assess what the fuck is going on here.
Yeah.
And it's just a maturity thing that took me a long time to
Definitely.
and I can tell you, even like when I started making money, it was a whole different set of emotions. Like when I was trading equities and really doing really well, and I went through almost like I would say close to 2 years where I had like maybe 5 or 6 down days. And it was such a different set of emotions. It was like the ego that you had to put under control. And then like the amount of anxiety and pressure that you're putting on yourself. Like we used to break keyboards like they were like you were stepping on a piece of ice.
Yep.
Like I would say on an average busy day, there was like 5 to 10 keyboards broken by all of us. It became this like rite of passage, like so much so that like I once had a friend that smashed a keyboard. I mean, he was maybe down like 300 or 400 grand trading for the day and flipped out and smashed his keyboard so much so. And mind you, this keyboard's still connected to the screen, that it was started lifting offers.
Oh my God, really?
And he bought like 1 million shares of like Broadcom or something, and like way more than he was supposed to, and ended up making all.
That's hilarious.
He kicked off a quick 5-minute panic and rally because he was just rinsing everybody.
Oh my God,
and
that's hilarious.
And you think about who's this other sophisticated trader, like they in trading that's on the other side, the visible hand in the market. And it was some
Exactly.
dude that was fucking pissed because he was getting his ass kicked for the day and
Day.
smashed his fucking keyboard.
Keyboard.
And like, you know, so it was such a different set of emotions. And then, you know, and you're young. I was 26 years old at the time. And like, told you guys, which, you know, maybe if we have time, we can share some of those stories. But like, went to Vegas in 2000, like 7 times in a year, and like had a crew of guys that we just had, they were all traders. It was wild. But you know, once I got out of that phase, and you know, and I got hurt on 9/11 too, really bad. And
Yeah, me too.
you know, it took me a couple of years to come back from that too. And like, I've been through it. And you know, and you take a step back and you think like, just, it's so important to like not like to understand how to take risk. And I think it's really, oftentimes it's warranted to like take a lot of risk because there is a very significant asymmetric opportunity in front of you. And it's okay if you lose, because like your probabilities relative to your gain like are so off in your favor that you should be throwing the kitchen sink at things. I do believe that, and that's, to be a good trader over time, you need that. And but for the most part, like I look at it as like go look at your friends who have Harvard law degrees and what kind of money they make, and like how many hours a week they have to pull to do it. And you're like, you probably could make that same amount of money, if not more, working half the time, having a life for yourself, and balancing yourself just by like having some, you know, having a trade that you understand how to do and not getting out of your wheelhouse. And it's, you know, it's easier said than done, obviously. But over time, I think I've just really matured to it. And you know, my emotion, I don't have those emotion, you know, those highs and lows anymore. Not having that is really important. And you know, it's, I like to think of myself on the trading side as like a really well-paid plumber. Like it's like definitely more the grinder. Like you know, I'm not the guy that takes the 100x in crypto, even though like I've gotten in things really early. But like, you know, you take a 5x or a 10x, it's pretty great, and you can always get back in. And like, I am a big proponent of ringing the cash register when you think, you know, it's time. And one more thing I'll say about this, and you know, for your listeners who are maybe just more retail and trading longer term kind of swing trading, the market is so like, so many people rely on media for information about, you know, for trading, and media is not aligned for you to trade properly. And it's not being done on purpose. It's just the way it works, and the way it works with clickbait and with like understanding SEO and like how things trend. And there's this weird reflexivity to it that like, the reality is that to be trading, like the real opportunities in crypto are right now. And I'm sure most people are thinking, well, you know, is Bitcoin going to zero? And it's just not the case. But in so much of the media, you can get Jim Cramer saying like, I'm not into crypto anymore or whatever. People listen to that, but then when Bitcoin's at 52,000, his producers are going to be like, you're bullish crypto again.
Yeah, exactly.
Yeah.
And then you're going to start buying it, and now you're just kind of buying it like at, which might still work for you given that the momentum's there.
Yeah.
But the real asymmetric opportunity comes when there's blood in the streets, and you have to understand the counter-cyclical nature of this market, and the fact that you're dealing in a market where even the most liquid assets are trading 80 to 100 volatility. And when you have volatility that high, like the noise looks like massive moves. And I think if you can zoom out and really understand like the cyclical nature of how these things work, you can create some really good opportunities for yourself. And that's something that like I definitely have gotten better with as a trader over time, is just understanding that cycle, and crypto has really helped with that.
Yeah. You know, it's the way I think about it too is just like the media, like they're not the sharps. Like they're not
No.
they're not the guys in there trading every day, grinding. So it's like you take it with a grain of salt.
That's right. They're trying to get clicks.
Yeah.
They're trying to get viewers. They're gonna say, what they need to say to maximize that. They're not there. They're not always the ones giving you the best advice in that way. And I mean, these are the big media, giants that are looking at these things, and you can just see it in the headlines. Like when crypto, last time up, like Bitcoin's at 4,000, and like, Arthur Hayes had to go pull the plug on BitMEX to prevent the cascade into liquidations from sending it even lower. But like that was a significant opportunity, and it wasn't until we got to like broke 20,000 that everyone became excited about it.
Mm-hmm.
I mean, it's like 500% from the low.
Yeah. Yeah, I think and we've talked with some traders, even we've had some like mental game coaches on the podcast, and what a lot of them have echoed is, because of like this media factor and us being like so driven, with the internet, everything so fast at us, that these overreactions create some opportunities for us as traders, potentially and stuff.
Yeah.
And so, that's something I always try and keep in mind as well.
And it works both ways. It works for the opportunity when there's like blood in the streets, so to speak, and you have conviction, or you understand what this, what's really going on behind the scenes. And that's a form of asymmetry. Like you want to take advantage of that, especially like when you're building a core position, and then you can find yourself on sides over time. You can start trading. You can start trading around that position. But it also happens during the euphoric phases of these cycles, and you need to be looking to shed position when you have those kind of parabolic moves that they're unsustainable. Like gravity's a bitch. And when even like I am a big long-term Solana believer and have been in it for a couple years now, and like even that last run up, there was a lot of signs that it was like just was too much. It was too much excitement. It was over euphoria, and I got out a lot of my position. And fortunately it worked out. It could have continued up to 1,000. Would I have been like, losing sleep in a different way? Maybe, but I think it'll go there over time. It's just like when you see those kind of parabolas, like they're unsustainable. I mean, they move fast, they're unsustainable. Those are usually good opportunities, whether it's short term or long term, to cover and then reposition and then start the cycle again.
Yeah. I forget who said this, but I love this quote. One of my favorite quotes, like in the market, is like there's no, the only thing certain in markets is mean reversion.
Yes.
And I like that. And like, so when we see these type of parabolic moves or stuff, because, I mentioned in the beginning, I like shorting. So, always things like that catch my attention. Because you're going with the flow of things, I feel like.
Yep. No, it makes sense. I'm a big fan. I mean, timing it is hard.
Sure.
You can use all the tools in the world, but like if you get caught in a squeeze, then that's bad. Like you generally want to get long, and you want to establish or get out of positions. And like let's take it down to a very short time frame. Like if you were trading like minute by minute, like during liquidations, like in the derivatives markets in crypto, for example, like they happen often. And like, that's always when the pendulum swings. Like you get a big liquidation, prices, because there's less price sensitivity because the algos are just like covering trades. That's when you want to be getting long on the downside. And then it happens on the upside and shorts get squeezed out and they get rinsed, and then it rinses the other way. That's when you want to be shaving your position. And like, that cycle, just regardless, it can be from down to picoseconds out to weeklies and monthlies. Like that cycle just works over and over and over again. And though it's in those edges of the tail that of the distribution, if you're talking about like mean reversion, where like most of the volume is happening kind of in the meat of the distribution, but in the tails is really where you want to be ideally taking action. And I think that's when the best opportunities exist, both getting in and getting out.
Yeah, absolutely. I like that. Well said. So Dan, just curious how Hxro came about. I know we mentioned it a little bit, but tell us anything you want about Hxro, what you guys got in the pipeline, et cetera.
Yeah, sure. So it came about because we were looking to establish a DeFi alternative in terms of like derivatives market infrastructure. And you kind of have the incumbent stacks that exist today around the big exchanges and clearing houses like CME has CME Globex, and then they have CME clearing underneath. There's Eurex and LCH ClearNet and ICE Clear, and we've kind of taken that stack and built it all on chain. And so and all of that infrastructure has been wrapped in various SDKs and APIs, and whether you're a market maker looking to provide liquidity, you can come and plug in, connect via the APIs, or if you're an application, whether you're like a DeFi or CeFi user-facing application, you can come and plug in, and then all of that liquidity, regardless of what app it's being generated through, or what market maker it is, or what professional trading firm or automated trading system it is, all collects and then bottoms out into our marketplace. And then the idea over time is to progressively decentralize the network. So all of the decisions made around the network are ultimately driven through network governance. And that governance and your weight in governance is determined by your holdings of the HXRO token. And then that token is staked to the network. And then depending on how long you stake, there's some like multipliers to give you, more stake weight. And then that, depending on that weight, determines what your voting weight is when there are things that need to go to governance for a vote. At the outset, we set up a foundation, 5-person foundation that is helping to drive some of the early decisions. A lot of the largest participants in the community, like I said, are big professional trading firms. Jump Trading, Susquehanna, CTC, Pattern Research, Alameda, a few VCs, and then some long-term hero holders who are all committed various types of resources, whether it's engineering or just mind share from the risk departments, thinking through how to solve some of these things on chain. And we built that out, and now some apps are starting to connect. We're in an alpha sandbox state now, so it's on mainnet. We're using a fake test token on mainnet and allowing teams to start connecting and some apps to start connecting in, and then they're trading in this sandbox, really with the idea to just work out some kind of final bugs before we open it up to real USDC collateral, and then have a bunch of kind of incentives and reward system, very DeFi-esque modeling in terms of how the economics work around it, and really trying to create this third lane of consumer choice and derivatives clearing. And what I mean by 3 lanes is you have this incumbent, like the CME world, you kind of have this centralized direct clearing model, which is what FTX is doing now, and then you have DeFi, and we're really trying to position ourselves to own that DeFi lane and give an option for for applications, again, whether they're decentralized apps at the user-facing layer, or they're CeFi, like it could be a CeFi exchange that's looking for additional liquidity or wants to spin up a specific type of market that they think there could be a lot of opportunity for in terms of a product, and create that. They can come create that market on the network, and as liquidity starts building and it becomes more of a viable market, and market makers will participate in those markets or they won't. And there's a couple variants of AMMs that are being added to the network as well, and that's it. And then we're about 4 weeks out from launching kind of the next phase, which will be on USDC collateral, and staking will go live from there, and then go from there.
Nice. When I was first looking into this, man, I was just like, we're talking about asymmetrical bets. I feel like this is such a, it's providing something that the marketplace needs, that we need in general. And so if this hits, I think it'd be awesome.
No, I appreciate that. That's the plan.
Yeah. Open to Americans are
not yet.
Yeah. So what's
anything
to say behind that, or
no, look, here's what I can say in a very positive note. It is geo-blocked. The network is geo-blocked out from US. One of the requirements of applications that are connecting is that they are doing what they can to geo-block US out. And we are doing taking some additional steps around like KYT, which would like know your transaction. There's some requirements of applications in terms of like kind of the KYC element, which is to me the most important. Like it's the most important thing, even before you get to just general US CFTC derivatives regulation. Like you really have to make sure that the funds that are moving through your network ideally are clean, and you know, you're doing what you can to keep out bad actors or actors using mixers or things like that. And so we've been thinking through that quite a bit. But I will say that some of the new regime in terms of who's in terms of commissioners of the CFTC, one mainly being Caroline Pham, very, very positive for innovation right now. And so I think kind of the path there is seeing FTX through with their they're trying to capture a more substantial type of DCO, which is like what the clearing layer needs in terms of a license in the US, and kind of collapsing everything similar to what we're doing in a DeFi sense. But they're doing it centralized and getting approvals with the CFTC on what they're doing, and then starting to explore this next layer. It's going to be a while yet. There's no doubt about it, but we have been proactive with reaching out to CFTC and between our attorneys and some of our investors. Like one of our investors, the president of it, is the ex-head of derivatives at Citigroup, and been a very big proponent and great, kind of advisor to the project and helping to shepherd a lot of this in. And my plan over time in terms of is we obviously want to get to a state where there is a viable opportunity for US to get involved, but there are regulations here that need to be paid attention to, and we want to work proactively with regulators in order to kind of best maximize the opportunity for the long term.
Yeah, absolutely. Makes a ton of sense. Do it the right way. I know we're running up on the end of our time here, so we'll speed through these last ones. Last thing I want to ask you about Hxro, you said you're a long-term believer of Solana. Hxro's built on Solana. Why was that the blockchain of choice for you guys?
Oh, very simple. When we first launched Hxro, we actually launched in early 2019. We started building in late 2018. And we built a centralized platform for these kind of exotic gamified options. It was just a front end, and with an engine that we created behind it. That actually is kind of caught lightning in a bottle. It was pretty interesting. Little bit more of kind of the degenerate path of things, but we wanted to build this infrastructure and really go after this clearing, this risk and clearing stuff, because we knew how to do it. And there was a lack of people that were at the time that were deeply entrenched in traditional markets. And my experience working with exchanges as COO of a trading firm for a number of years, and being a trader and being part of these exchanges for a long time, I felt like maybe it was my calling. And and what I realized is that anybody that did have that background was probably trading, because the opportunities were so rich, and like in crypto. And this is just how I am. I guess I went after the more difficult, bigger prize, but I do think it's something that can be materially impactful over time. So it's very important that we do that. But at the time, the only thing to really build on was Ethereum, and Ethereum just didn't have the throughput capabilities or the transaction cost model to facilitate the types of infrastructure that we wanted to build, which was something that gave in many ways a similar experience to some of the larger traditional players in terms of speed and cost structures and things like that. Things that we can improve upon by removing a lot of the intermediaries too. There wasn't a viable opportunity, so we ended up building what we built, which was this early stage of Hxro, this kind of exotic options platform. And then in 2020, Project Serum, which was a project that came out of FTX Alameda, that project basically built an on-chain order book on Solana, and it showed us that you can build something that requires high throughput and has super low costs on Solana. And we explored it, and I had been fortunate to have a good relationship with Sam Fried for a long time, and talked to him about it quite a bit, and the opportunity was there, and so in early 2021 we started going after it.
There we go.
That's how we ended up.
Good stuff. Good stuff. All right, Dan. I'm gonna do some miscellaneous rapid fire questions, and you're out of here. All right.
All right.
All right. What hobbies you have outside of markets?
Oh, golf and my kids.
Okay. Any good books you've read lately? Book recommendations?
No, I purely read white papers right now. So.
Okay. All right. All right. There we go. I know you're
I'm not your typical CEO that reads 69 books a week and then brags about it on Twitter. And I don't take cold showers. I eat meat. I eat a lot of meat. I like to play golf. I like to be outside when I can. And I work excessively long hours otherwise and have a horrible back because of it. So that's me. All right, keep going.
I love it. All right. If you were chosen to have you had to choose a last meal, what would it be?
Oh, short ribs. Short
ribs. Okay, I like that. Good choice. I know you're based in the Chicago area. I don't know if you're a Bears fan, but the over under on the Bears win total is 6.5. What are you taking?
Wait, over under on which part of it?
On the Bears win total this year, it's 6.5.
That's a really good line.
It is. It is.
Yeah,
there's no edge in these, by the way.
I'm going to take the over because I don't want to be like going to a Bears game and somebody sees this and I'm in the bathroom and walking out. Next thing you know, I have a knife to my throat. So
yeah, the Bears fans are serious, man.
They don't fuck around.
We'll see, man. I not to get on a tangent here, but I think the quarterback has some promise, but they haven't really done nothing to really help him out this year.
Yeah.
The offensive line terrible, not many weapons, but
dude, I grew up in Detroit, so I've been actually like a lifelong Lions fan.
Have you?
And so I know the pain of all pains of being a football fan.
Sure. I actually a lot of the sharp people, like I mentioned before, I sports bet as well, primarily football. A lot of the sharp people I conversate with got a lot of Lions overs. Got Dan Campbell for Coach of the Year. They're looking good. I don't know if you've seen them on Hard Knocks. I actually watched it last night.
No,
it's incredible.
I've been recording it, so I'm gonna take a look.
It's incredible. I always love the Hard Knocks, but yeah, real good this year. You mentioned the Vegas trip. I would be remiss if we didn't leave here without this Vegas trip, or the 7 times in Vegas. Let's hear about it, Dan.
So quick last story I'll share. But yeah, we got a little hook on going. There was a group of guys that were traders on the floor that I had met through some guys I was trading stocks with, and great, like such a wild group. And I was 26 years old at the time and never met guys like this in my life. And they were going to Vegas and I didn't know jack shit about it. And I started going and, I hit lightning in a bottle with them because a couple of them were like really good looking guys. They had really good game. And I was this young single guy at the time, and it was a time when there was a lot of good opportunity in trading and stuff. And we were making good money, and kind of the Mandalay Bay was the new hot spot at the time. And long story short is there was a guy that I'll share one story out of this. There was a guy that I knew who, and I'm not going to name any names, but he was an absolute wild man, like degenerates of all degenerates, crazy gambler and big trader. It ended up getting in some trouble with the Merc because he was like, we were talking about, being able to game the clearing thing. Like if he was like debiting his trading account on Fridays, he'd have his clerk card up a handle off. So it made it like 100 NASDAQ ticks off in his favor. So he basically had the weekend to like go back to his clearing firm and get money back in the account before they discovered the error. And he would go to Vegas and he'd go to Vegas and he had credit lines all over the city. And, people don't know this, but in Vegas, like if you have credit, you basically have 30 days to pay it and it's interest free. And so he'd pull from all his credit lines all over the city he'd have his friends come with him, and he'd like take $25,000 chips and like hand them back to his buddy, who'd then go like play with it for a while and then go color it up and get cash, and he'd come back with like 100 grand or 200 grand in cash, regardless of how he did, and then he'd get a check and go to the clearinghouse and say like, here's, like, I'm not debit anymore. And eventually it caught up with him, of course.
Yeah,
but this guy also is like a tremendously good looking guy, and ended up in a relationship out there too with one of the biggest actresses in Hollywood. And I'm not going to name any names on here, but he was involved here too at the time. So it was just in typical, 90s, early 2000s, 80s, even trader fashion, just a wild guy. And I watched him go through this relationship firsthand with this girl, and it never made public news, but some of the things that went on, and I'm going to stop the story there, were absolutely wild. And so much so that his significant other caught him, and this is the type of shit this guy gets away with. And so he's got all this stuff going on, and like doing all this shit, with carding up the wrong numbers, and like he had this like whole cycle going. Like, who can deal with that pressure to begin with, right? And like, it's really crazy. And then gets involved with this starlet, and so much so that they got him. They started writing each other in email, like on email. And mind you, there was like nothing, like there was no, like, the idea of IMing at the time was like the DMs were AOL, like it was a long time. And so he ends up, his significant other catches an email from this girl, and she's like, it was so out of left field that she didn't believe that it was the girl. She thought it was one of his friends that was just fucking, which is how he got away with all of it. Because it was her name was in the email. And I remember him like taking me in his office, like, you're not gonna fucking believe this. Because we were like, oh my God, this guy's life's over, right? And then sure enough, he gets away with it because she didn't believe that it was, what? So that's as much as I'm going to tell, because what happens there stays there. But that was definitely an exciting time. And it's funny because like I'm older now, and obviously don't do that shit, but and married with children. But it's fun to see, like, even in crypto, like, you kind of have these hot moments, even with like the Wall Street bets world and all that stuff. Like, you can see a lot of that same kind of thing regenerating. And when you do go out to Vegas and you see traders out, you always know who the ones are, that are slinging it, and you're like, yeah, they're having a good moment in time right now, so enjoy.
Yeah.
Exactly.
Oh man. So he met her in Vegas. Is that where he
met her at a fight in Vegas, and really, and the guy looks like Elvis, like in his younger years, like really good looking dude. And he just had a gift. He had a gift for the ladies, man.
That's incredible. He should write a book.
He could write and he's the type of guy that would write a book, and and he's like, he talked to me, you're like, this guy can't write a book. But he'd find somebody to write a book, and somehow it'd get turned into a Hollywood movie, and he'd make $1 billion off of it.
Yeah, I mean, people love this shit. People love this shit. They love these type of stories. That was great. Well, thanks for sharing us with that one. That was a good laugh. That's incredible. And so that's going to conclude today's episode of Confessions of a Market Maker. If you guys like this episode, please leave a review for us. If you'd like to join a supportive and professional community of traders, you can join us at microefutures.com. Dan, tell the people where they can find you. Anything else you want them to know?
Yeah, best place probably on Twitter. At HXROBTC on Twitter. You can learn a ton about Hxro Network. If you start it again at Twitter at HXRO Network, and just follow that. There's links to our Discord channels in the bios there. That's probably a great place. There's almost 7,000 DeFi traders in it now, and growing, and can learn a ton there, and also just a great community to be a part of.
Excellent. JJ, parting words.
Thanks so much for being with us. It was it's always nice to have old floor traders on the show, you know, and guys who did that.
I'm really happy to be here and glad we can make it work, guys.
The Vegas stories were nice, you know, having had an apartment in Vegas at one time. I know it's nice to go back down memory lane. And thanks so much for sharing the information and teaching us about the new era of this whole marketplace.
Absolutely, I appreciate it, and thanks again for having me, guys.
All right, thanks so much. And so for Dan Gunsberg, aka Gunny, I'm Paulie Walnuts. He's the gorilla of House Street. Make sure you're using stops though.